Alrighty guys, so today we're going to look at kind of the basics of taxes, and we're going to look at how we file taxes in kind of a simple manner. And tomorrow we'll look at a little bit more complicated way of filing these taxes. But I want to kind of give you the basics today. Alright, so to start out with, when we're looking at different types of taxes, some of you may already be familiar with some of you might not be as familiar, but let's talk about a couple together either way. All right, so to start out with, most of you have probably paid sales tax at some point, right? And in Glenn County, our sales tax is 7%. For the state, we have 5%. For the local government, we have 2% sales tax. All right, so that's why in Georgia, some counties might have higher sales tax than others. So in Glenn County, we have two different types of sales tax. All right, we have a SPLOST, which is a special propositional local optional sales tax. All right, that goes towards like bridges and roads and things like that. And then we have an eSPLOST. So if you're going to vote in this election this November, on that ballot, you're going to see an educational SPLOST. All right, and again, it's an optional sales tax. The citizens of Glenn County essentially vote in favor or against this. And on there, it'll say exactly what it's for. All right, and so the SPLOST that's on the ballot this time is looking at finishing up the new Altama building. It's looking at adding on some buildings to Risley Middle School, and it's looking at adding new buildings onto Glenn Academy as well. So if that's voted in favor, then we'll continue to have this 7% sales tax, and the money will go towards that. If it's voted down, then our sales tax will become 6%. All right, we've got a lot of other types of taxes as well. You might have seen property tax, or you might have seen the different payroll taxes come out of your paycheck, the state and federal income taxes. And so generally, what the taxes are taken out for, they're used for in return. So like federal taxes that are taken out of our paycheck, well, that'll go towards the military or Medicare and Medicaid and Social Security. All right, whereas the local taxes will generally stay pretty local. All right, and so we've got a lot of different types of taxes that we're going to look at today and tomorrow. All right, so just to kind of recap, sorry. All right, when General Motors purchases new automated equipment for use in building its cars, it would be calculated in the GDP as what? So we've got consumption spending, investment government purchases, or export spending. All right, so if we're looking at General Motors being a business, then that would fall under B, right? They're investing in this new type of equipment. That way they can make better production for these vehicles. And so that would be business investments. If we're looking at General Motors selling cars to the population, that would be consumer spending. All right, so let's look at the basics here. Let me get a sip of water real quick. So at its core, taxes are the way that our government makes revenue. So they wouldn't be able to fund anything if they didn't take taxes out. Now the amount of taxes that the government takes out and how the government uses those taxes are kind of hotly debated. Some political parties would be in favor of more taxes, some less taxes, some thinks that the government should have a greater role in society and some less. And that's all kind of a matter of political opinion. But we break these taxes down into three different types: local, state, and national taxes. All right, and those go to their respective governments. Our sales tax stays locally. Our property tax goes to the state level. All right, your federal income tax is taken out of your paycheck and given to the federal government. All right, but the key thing is this is the main form of revenue for our government. All right, another big thing is that they can't be used for individual interests. There's a lot of times in history where different politicians have gotten caught using taxes or tax money for personal gain. All right, there was even a teacher, or not a teacher, but there was an employee at Brunswick High School, or she wasn't at Brunswick High School, she used to work at Brunswick High School, but she ended up over at Glenn Academy, who used taxpayer money from the school to buy groceries with, and she ended up losing her job because of this. All right, and so tax money has to stay for public good, right? So when I was in charge of the soccer team, we would get a budget every year, but I couldn't use that budget for a new car or new clothes for me. All right, that would be against the law, and I could end up in jail for that. All right, so taxes have to be used for public good. All right, so we tax exports, but we don't tax imports. All right, sorry, vice versa. All right, we tax imports, but not exports. The idea being behind this is that let's say that we have a Honda on the market and a Chevy. All right, well, generally, the Honda is going to be provided at a little bit of a cheaper rate because the Chevys made in the United States are generally going to be a little bit more expensive. So the idea behind taxing imports is if we want Chevy to succeed instead of Honda, because Chevy's an American-made company, an American automaker, all right, we're going to want to add a tax onto these foreign vehicles, let's say like $3,000. All right, that way they are more expensive by comparison. So we tax imports, but we don't tax exports. We want to make foreign goods more expensive, all right, and we want to make our goods cheaper by comparison. We'll talk a little bit more about that when we get into international economics, though, and tariffs. All right, so what we'll look at with our tax activity in just a little bit are a couple of these key terms. All right, so your tax base is what you're taxed off of. All right, and so your tax base starts at your revenue, the money that you make. So let's say that I make $50,000 this year. All right, well then my tax base would be $50,000. That is what I would be taxed off of. All right, sales tax, like we said earlier, is what you pay for it regardless of how much money you make. It's about consumption. So sales tax is a pretty fair type of tax because it isn't based on how much money you make, it's based on what you purchase. All right, but the downside though is that generally it hurts people of a lower income a little bit more, and we'll talk about why that is. Property value is based on the value of the property that you own. So the property tax on my house, which is about $170,000, is going to be higher than the property tax on a house worth $100,000. Because the value is higher, all right, the property tax is going to be higher. Same thing with vehicles. So if you own a vehicle, you have to update the tag every year, that little colored sticker that you put on the back of your license plate. Well, that is to show that you paid the property tax on your vehicle. So the property tax on my truck is about $35 a year, which isn't insane. All right, but when I had my little tiny Honda CRV, or a Honda Civic, which was a 97, the property tax on that was like $8 a year. Because the car was worth so much less, the property tax on it was lower. All right, and corporate income tax is very similar to the regular income tax. We're just looking at corporations, and they're generally taxed a little bit more heavily than individuals are. All right, so we're going to look at 3 different types of taxes today. All right, and so we're going to use my pay stub in just a little bit. One second. All right, we're going to use my pay stub in just a little bit to look at a couple different types of taxes. All right, so first off, we have proportional taxes. These are ones where the percentage is the same for everybody. So what we'll look at in a second is my paycheck and my Social Security tax that comes out of that paycheck. Hopefully one of you has a pay stub available that we can look at, because that pay stub, that Social Security tax, should be the exact same as mine. If something is proportional, that means that it's even. So out of all of our paychecks, if you work, 1.4% of that paycheck should be towards Social Security, right? Regardless of if you're a millionaire or if you just make $100, 1.4% of that paycheck should come out for Social Security. Now, a progressive tax is one where as you make more money, you're taxed more and more heavily. All right, and we'll look at a chart for that in a second, but essentially, since my wife and I together make about $100,000, our tax bracket is pretty close to 30%. However, if you look at Bill Gates, who maybe makes $100 million in a year, his tax bracket is going to be closer to 50%. Because he makes more money, he's taxed more heavily. Whereas some of you might make $5,000 this year, your tax bracket is about 10% of your income. All right, because I make more money than you, I can pay a little bit more in taxes. So income tax is generally a progressive tax. The more money you make, the more heavily you're taxed. All right, a regressive tax would be the opposite. A regressive tax is one that hurts lower income people more. All right, and so an easy way to think about this, right? So those of you that work, chances are you spent 100% of your income last year. If you only made $3,000, chances are there's not a lot of that $3,000 left around. Maybe you were able to save some of it, but chances are it had to go towards gas or food or clothes or things like that. And so in that case, if you make $3,000 and you spend $3,000, well then 100% of your income is affected by that 7% sales tax. Whereas for my wife and I, if we make $100,000, maybe we only spend half of that on food and groceries and clothes. Maybe the other half we're able to invest or save. Well, then that means that only half of our income, or 50%, is going to be affected by that sales tax. Because sales tax doesn't apply to money in a savings account or to money that you invest. It's just when you purchase things. All right, and so because of that, that sales tax is going to affect you a lot more than it's going to affect me. Sorry, you're going to pay 100% of your income with that sales tax. I'm only using it on half of mine. Another easy way of thinking about this, I'm sure that all of you have been at this point at some point in your life so far, where maybe you're sitting in that line at McDonald's or you're pumping gas and you're trying to do the math in your head. Like, all right, I've got $4 and I know that I can get this, this, and this, and if I have to pay tax on top of that, I'm good, right? Well, I haven't had to do that since I was in high school. Now that I make more money, if I want something, I just buy it, right? I try to save my money, but I'm not having to count pennies because of taxes anymore. So regressive taxes are ones that hurt lower income people more. And we'll look at some other examples of that as well. All right, so I want to leave it off here for now. Go ahead and switch over to the Google Meet, and we'll talk about this a little bit more in detail.